Understanding the financial intricacies of a real estate transaction can be complex. Today, we're going to break down the numbers on a 2-1 buy down, shedding some light on how it can benefit both buyers and sellers. Okay, so now let's get into it. Let's start with the basics. Imagine a scenario where a buyer is purchasing, let's say, a property for $300,000 and they've secured a conventional loan amount at $285,000. So they're putting $15,000 down or 5% over a 30-year term with an initial interest rate of 7%. Now, here's where the 2-1 buy down comes into play. It's a strategy that benefits both parties. Let me explain. With a 2-1 buy down, the interest rate for the first 2 years is bought down by 2% in the first year and 1% in the second year. So instead of starting at 7%, the buyer's interest rate for the first year will be 5%, and for the second year, it will be 6%. First, let's look at the buyer. This directly impacts you. Let's talk about the numbers and how it affects your payments. In the first year, with the 5% interest rate, your monthly mortgage payment or principal and interest would be approximately $1,530. With the 6% rate in the second year, it rises slightly to around $1,709. As you can see on this chart, the first year you are saving $366 per month, and the second year, $187 savings per month. This strategy can be particularly beneficial if you expect your income to increase in the coming years, or if you need some breathing room in your budget during the initial years of homeownership. By paying less interest in the beginning, you'll have lower monthly payments, making it easier to manage your expenses. After the initial period, your interest rate will reset to the original rate agreed upon in your mortgage contract. So it's important to plan ahead and ensure that you'll be able to afford the higher payments once the buy down period expires. You can also refinance your mortgage if rates drop and you want a lower overall interest rate. Now for the seller. You might be wondering how this benefits you. Well, the lower payments in the first 2 years make the property more appealing to potential buyers, potentially increasing demand and helping to sell the property faster. You might be wondering how much it will cost you. The cost in this scenario is $6,642.72 in concessions paid by you, the seller. Instead of taking a price reduction, you might want to consider offering this, as it helps the buyer reduce their monthly payment for the first 2 years. So, in summary, the 2-1 buy down is a win-win strategy. Buyers enjoy lower initial payments, making homeownership more manageable, while sellers benefit from increased property appeal and potentially quicker sales. Understanding the nuances of real estate financing can be daunting, but with the right guidance, both buyers and sellers can navigate the process with confidence. If you have any questions or want to explore your options further, don't hesitate to reach out. I'm here to help you every step of the way.